Well, we are officially in earnings season with the four major U.S. banks kicking things off, but we've also heard from other companies like Delta Airlines as well as United Health. And broadly, these are all pain points when it comes to the market action. Let's bring in Grant White, portfolio manager and investment advisor at IA Private Wealth. Grant, stakes are high, right? The forecast for this year is for total profit growth on the S&P 500 to be 10%, and they're supposed to do that against a weakening economic backdrop. I know it's very early, but did today's set of earnings give you any pause?
I don't know if it gave me any sort of a pause per se, but I do think it's a good reminder that we need to be really cautious, or I think investors should be cautious about expectations going forward. I think there's a lot of investors out there and portfolio managers who are pricing in almost a perfect scenario for 2024, and anything less than that is going to cause volatility, of course. And so I think the earnings today and the forecasting going into 2024 should be a good reminder of that. And I think Jamie Dimon from JP Morgan is frankly trying to let people know that. He's been trying to let people know that for a while.
Let's talk about those bank stocks. What role do they have in your portfolio? Is JP Morgan, for example, one that you're picking away at as we look at the momentum fade?
Yeah, so JP Morgan in particular has been in our portfolio is kind of one of our more core holdings for quite some time now, and largely because we love the stability of the business, but we also love their leadership. I think Jamie Dimon is one of the best, if not the best, in the world, and so it's something that we're chipping away at. But I wouldn't say we're adding too much at this point. We have a healthy weighting on JP Morgan, and we're holding it. And I think that again, what we're seeing today in the environment, it gives us a good reason to continue to hold it, but at the same time, be a little bit cautious over our expectations in 2024 going forward.
Now, Bank of America is another one that you hold. This one did not post as stellar results as JP Morgan. It's rolling over here. What's your thesis when it comes to Bank of America?
Yeah, so Bank of America for us, is a bit more of a play on the retail side of banking. We like their strength there. Admittedly, we're not as strong on Bank of America as we are on JP Morgan, and so we hold it in lower weightings. But we still believe in the business. We like overall. We still like U.S. banking, and nothing in this short-term phase has caused us to not like U.S. banking from a long-term perspective. I think that the reality right now is you want to be cautious about the size and the scope and diversity of what you're holding in U.S. financials. I see a lot of challenges for smaller banks and mid-sized banks, especially as they've been facing an earnings squeeze over interest rates and the cost of deposits over the last year, and so we still like the diversity of both JP Morgan and Bank of America. If I had to choose one, I'd choose JP Morgan, frankly, but at the same time, we're still confident in Bank of America overall.
Let's talk airlines. This is also a pain point right now, even as Delta reported record numbers when it came to passengers that are traveling, but they're dealing with issues on the cost side, and it's really sending shockwaves throughout the industry. Is that appropriate response or a bit of a knee-jerk response to see not only Delta down 8%, but the whole airline sector?
I feel like airlines, this is like it's a common trend that we see year over year or in cyclical fashion anyway. I have a tough time with airlines personally because on paper, I love the idea of having like an experience-driven business and so on. And I think like a company like Delta does a pretty good job at that. But then you're at the mercy of costs, like, you're pointing out earlier in the show, labor costs and commodity costs and all of those things. And so that, and supply chain costs. And so that presents a real challenge for me with airlines on an ongoing basis, in saying that it's great coming out of a good year like 2023, where, especially where we're seeing having the ability to sell more of those higher margin seats. You talk about business class and first class seats, and so that's great. And I see that some of that trend I think is likely to continue going forward. But in saying that, we have a tough time when we're always battling a commodity price or something else with airlines, and so we're not investing into it right now. On paper, I like a lot of this business, but at the same time, I'm not willing to fight the fight against commodities.
Where's your conviction then these days?
I think that investors need to be looking beyond the traditional right now. We're looking at last year and what markets did. And on again, if you look at the high level headlines, markets looked great, but there's a big chunk of the markets that haven't outperformed and frankly have underperformed the market. And so I think you need to be looking past the top 10 in the S&P 500 or the Magnificent Seven. And so we really like a lot of smaller tech names as nice alpha generators in our portfolio. Nintendo is one that actually we've recently invested into, and then something we've never held before, but it's a really interesting company in our mind. And I think that they finally figured out how to sell consoles in a better fashion as compared to having a good console like the N64, then going to a dud like GameCube. They're looking at more incremental add-ons going forward with their Switch products, and it's kind of like looking at iPhones, frankly, and what Apple has done over the last 10 to 15 years. We think Nintendo has kind of caught on to that trend, and we believe that they're going to capitalize on it. On top of that, they have a great media business and things like Pokemon, which nobody really values anything with Nintendo, but it's a huge safety net. Basically, if you don't like what they're going to do on the gaming side, they have all these great products out there. They're into Hollywood, obviously, with the Super Mario movies and so on. And so we think Nintendo actually has a great safety net and a lot of growth upside. And frankly, it's a lot easier for them to double in value than Apple at this point. And so I think you need to be looking beyond the big headlines.
Well, Japanese stocks also have just generally been on a tear. They're hitting a 34-year high. And part of that is underpinned by the weakness that we've seen in the yen, which is also trading near multi-decade lows. Is currency a risk factor here? I mean, if the yen starts to appreciate, does that put some issues in front of Nintendo?
Yeah, I mean, certainly it could be a bit of a headwind there. At this point, we're not concerned over it. And actually, I think the trend is positive for us based on what we're seeing in Japan. And hopefully we continue to see more share buybacks and things like that, which will obviously be a net positive for our share price. And so, we're not concerned over the currency pricing right now. We've been adding into this position even as of just in the last week. And we believe that we've got a good long-term hold there.